Afternoon all, how are we all doing? Where am I? There I am. Good afternoon, how are we? Afternoon Danny, Baggy, Crum, Brian, Tom, Amy, Marco, Virginia, Jerry, how are we doing? John, God, could you imagine if I had hundreds of people in this room? The stream would literally take about 20 minutes to get started, wouldn't it? Ian, Dion, it's a good job there's not many of you here. Just a quick update on the DAX. Morning EMAC, afternoon EMAC even. Jimmy. Didn't manage to get out of the DAX this morning. So the hedge basically ran up. We got a bounce out of the gap fill, which I kind of was tempted to take, and I'm glad I didn't, because it didn't. We pushed down and held there for a while, so I didn't get out. It pushed up. My target was 5R here initially. I moved it down this morning underneath that support. And if I'd have left it there, I'd be out now. But I didn't. I got out there, entered a second position. We pushed up into ADR and then we're pulling back at the moment. But sitting in $1,200 a loss at the minute, which is not the end of the world. Basically, the hedge was locked in at $1,200. So it's just the normal hedge locked in. Haven't managed to get out. The trade is going to close out in the next 5 minutes because it's end of session. So unless this thing goes down to there by the next 5 minutes, I'm just going to take a hedge loss on it today. This is it's just a shame. We had that little rally down at the open. It couldn't make up its mind for the first sort of 40 minutes or so. But hey, not the end of the world. FX wise, loads of moves today. Oh, great. Pound CAD rallying even further. Just got out of that one. Yeah. I've only done one DD control on that. I might as well close that out, actually. Pound CAD. Break even on the second part, isn't it? Yeah, I'm going to close that. Flat pound CAD. So that's a nice exit. So nice easy out on that one. So initial entry taken on the H1M5. 4 trades taken. I got out of that one last week. I got out of that one today, earlier on, and I've got out of those 2 there. So there's one DD control of a 0.3 position. So overall, nice profit. So banked 2.25% today, banked 1.6 yesterday, 0.67. So 4.5% on the month, which ain't bad considering we're only 4 days in. Loads of stuff in profit, but I'm just holding stuff at the minute because that good old US dollar has just had some negative news. Finally, we've been waiting for some negative news on the US dollar for what seems like forever. And yeah, they didn't just miss the target on the employment change. They really missed it. 154K expectation off of 180K last time. We had a 100K drop, 100,000 people. They were forecasting 30,000. That is 3 times more than they were expecting. So US dollar, bye-bye. And obviously that's dragged the Canadian dollar down with it. There you go. So exit 1282. That one. So yeah, so kiss goodbye to the US dollar. Kiss goodbye to the Canadian dollar. Canadian dollar moves with the US dollar. Afternoon AZ, afternoon Ismet, afternoon Monkey. Why negative CAD? Yeah, so negative CAD. So the Canadian dollar moves with the US. So the US and the CAD move together, same as the Euro and the Swiss move together. Same as the Aussie and the New Zealand move together. So when you get bad news on one, it affects the other one. They're trade partners, yeah? So the US and the Canadian are the biggest trade partners. The Euro and the Pound on the Euro and the Swiss are big trade partners. Aussie, New Zealand, big trade partners. One thing affects the other. So you have bad unemployment in the US. That hinders the Canadian dollar as well. So it's all linked. Yeah, we've had a big start of a drop there. US dollar yen has dropped a little bit more, but pulled back again. This US dollar yen's really stubborn. Just as the US dollar weakens, the yen weakens. It doesn't go anywhere. I closed out quite a bit today. So I closed out New Zealand dollar yen this morning. I was going to hold that after the intervention yesterday. I decided not to because I've got US dollar yen exposure on. If this does pull back and we do get another yen weakness leg, I just didn't want to not take that profit. I'd rather have it here. It's realized I haven't got to worry about it. So I just got out of that one. I've posted in Telegram everything else I've closed. CAD Swiss I've closed. So flat that. CAD Swiss out of that. Nice exit. US dollar Swiss, closed that. That was one in, one out. Sorry, that was only part of a partial close. So that entry that I took yesterday, I closed that one out this morning. Still got two running at break even. Obviously, target's all the way down there. But I'm just worried about this potentially being a pullback in an upward channel. You know, I'm expecting a profit take on this whole thing, but if it's not, we're going to go low, high, higher low, higher high, higher high, higher low. Off we go. But I'm really hoping this is the start of the downturn for the US. So, been long enough, isn't it? So yeah, closed out loads today. Loads of ADRs. Pound CAD off the charts. Closed out pound CAD. Now, obviously, I just done that on here, so you know I've done that. Big, strong rally. 200% of ADR. There's no way I'm giving that up. 200 ADR exit. Thank you very much. I'll take it. Nice, big, strong pound today. So pounds had a good morning. Swiss francs also had a good morning, which is why this one's gone sideways. Pounds pushing up against the yen, pushing up against the New Zealand, screaming up against the US dollar. So the Canadian dollar, obviously very, very weak. Pound US, we know about the ADR on that one. So the Canadian dollar, if you look at oil, oil's come down again. So we've had negative news from the US, which has hindered the Canadian dollar. Oil is tanking, which has hindered the Canadian dollar. All we need now is a little bit of Canadian dollar negative news. Would be lovely, wouldn't it? We haven't got any CAD news this afternoon, but if we can get those PMI figures at 3 o'clock negative as well, see you later. I'll be flat this afternoon, but lovely. But we'll see. So other news today, Russia's Novak has come out about oil. So it's OPEC today. Meetings all day long. Markets just opened, sorry. Let's just whiz over to the markets. Let me just make sure all orders have gone in. 2 Dow, 2 NASDAQ, 2 S&P, 2 NASDAQ, 2 S&P. Good. Okay, that's all fine. We'll have a look at this in a sec. Gone short on the Dow. Wow, this is a whippy open. Bloody hell. Hedged on the Dow. That was quick. Thanks so much, Dow. Yeah, wow, that's a volatile open. I'm expecting a run on the US today, so we'll have a look at those in a sec. But OPEC meetings today. So if we scroll back a little bit, as this morning. Okay, so there's the PMIs for the UK this morning. They came out as really positive UK PMIs. We don't usually pay much attention to the PMIs for the UK because we don't produce much. Yeah. So if you look at the PMIs, where are we? Where are we? What's the day? Wednesday. Final services PMI. There we go. So it's the Purchasing Managers Index, basically. So because we're this is in the services industry, yeah, we don't, in the UK we do not purchase much in any shape or form. We're not an export country, so the PMI figures for us don't really do an awful lot most of the time. The services PMI, we don't buy a lot of services in. We sell a lot of services out. We're a big service producer. We're the largest banking country in the world. We are the financial hub of the entire world in the UK. So we export services rather than do much else with purchasing. So it doesn't tend to do an awful lot. The PMI figures today, though, were a hell of a boost. 2% up on forecast, which is a big increase by anybody's estimations. So although it's not red news, it's given the pound a bit of a rally today. And obviously with that US negativity, we've had a very decent reaction off of that. So that's where we started off this morning. Lagarde came out this morning, didn't really say an awful lot. So nothing much to go there. We had Bailey talking this morning, but again, really nothing. The job is not done on fighting inflation. Why did you not put the interest rates up then, you idiot? Never mind. Inflation is likely to fall this year, but it's not done. Why did you not put the interest rates up, you idiot? Inflation may dip to 5% or less this year. That's 3% higher than where we want it. Why did you not put the interest rates up, you idiot? Anyway, thanks for that, Bailey. You don't talk for a month, then you come out and tell us you didn't increase the interest rates. Good one. ECB came out. We can expect the interest rate cycle has been completed by now with present conditions. So again, Euro saying we're probably frozen. We're not going to go any higher with interest rates. Yet we have a member of the ECB a couple of days ago saying we're probably going to hike it again. Mixed messages. So nothing particularly exciting there, really, that's given us any guidance. There's your unemployment change and the huge drop on the US dollar. Fed swap contracts assign lower odds of another rate increase. So basically, we're going to freeze rates, negative US. Basically, anything to do with unemployment going up just scares the crap out of them. They don't want to put the interest rates up anymore. So this is to do with oil. We see record high global oil demand. OPEC may tweak its decisions if needed. So what we're saying here is that the oil demand is still there. Supply is still contracted. Russia and the Saudis are restricting their output, meaning there's less supply, less product available, still high demand. If you've got less product available and a lot of people want it, the price goes up. That's why oil's been rising. What they're saying is, Novak is now saying is OPEC may tweak the decisions on restricting that output, meaning they will give more output, which tanks oil, which is why oil's dropped today. However, we haven't got any confirmation of that from OPEC. So we will probably get something end of day as to what they're going to do. So that dip that we've just seen in the Canadian dollar and the oil may completely flip its head and go the other way by end of day today. So we'll see what happens, but we'll find out some more information about that later. So PMIs this afternoon at 3 o'clock to look forward to. Then Lagarde speaking again. She's already spoken once today. Highly unlikely she'll say anything new. Might do, but unlikely. So the only news we've got is 3 o'clock this afternoon. Oil down below ADR now. So really big tank on oil. Excuse the pun. Oil tank if you didn't get it. I'm here all week. But there you go. So that's the news covered. Would you class them together for exposure? No, because they move independently, the US and the CAD. They affect each other, but they move independently, yeah? So if you look at the US dollar CAD, that gives you an idea of the movement, yeah? So if they moved the same, you would find it do that. Yeah, they don't move the same. They have independent economies. They have independent import-export. They have independent relationships for import, export, and trade. They are independent countries, but they are affected by each other's economies because there's a lot of cross-border trade. And they both are big oil producers and exporters as well. So obviously, when oil tanks, they both tank. When oil rises, they both rise. When the US dollar unemployment goes up, the Canadian dollar unemployment doesn't necessarily go up. However, if something's going to have an economic impact on one, it will impact the other. So they tend to move, but what you tend to find is the move in the opposite on the other currency is a knee-jerk. So you can tell by this that the US dollar is stronger than the Canadian dollar at the moment. So this move that we're seeing down on both of them, it's not necessarily that US dollar, it's more the oil that's dropping the Canadian dollar. That's why the US dollar is stronger than the CAD today. So while they're linked, they're not exactly the same. Still no movement on the US, really. So this is really just a lot of weakness in CAD today. A little bit of strength coming through in the US at the open. But so the US dollar yen, noticed Marian's just asked for. There's not been any movement on this today. I was fully expecting yesterday, after the initial spike, to get a continuation move, which we didn't get. So far today, we literally haven't gone anywhere. We're down on the day. We had that lovely move in London, but they undid most of that move and pushed it back down again. So the entire London session has just been a range. So it's up to New York now to put a little bit of pressure on that US. We've just had negative news for the US dollar. However, it looks to me like the yen has weakened at exactly the same time. Euro pound ADR. So pound is pushing. Euro pound down. This euro weakness that we're seeing coming in, not against the CAD, obviously, because the CAD's just falling on its arse. But this is coming in off the back of this ECB this morning. If you're going to come out and say that rates aren't going up, your currency is not going to get strong, is it? It's going to get weak. So the euro is devaluing off of that news. But it might, it's not Lagarde. If Lagarde was saying it, I'd pay much more attention. But it's not Lagarde saying it. It's one of her cronies. So you take it a little bit of a pinch of salt with it. So US dollar yen. If you look at the other yen pairs at the moment, they're all holding at the moment. CAD obviously won't be because of what's happening with the CAD. The Swissie's pushed up and undone the entire move. The euro is pushing up as well against it. The pound is pushing up against it. That's undone the move. New Zealand is holding and the US dollar is holding. So there is weakness in the yen after that move. So it doesn't appear that the banks have decided, yeah, all right, we'll stop. We need to buy you. They're just not really doing a lot at the minute. So the yen's stuck. I get the feeling we will stay stuck for a bit. If you look at the previous intervention that we had in October, what we got was the intervention, although the intervention pulls back and then pushed back down again, it did hold for days before the move started, although it kind of ground down on its way to starting the move. So it could be that this is just going to be a little bit like that, and then we're going to go. Either way, I'm holding it because it's not pushing up. So, and the more US dollar weakness we get, the better. If those PMI figures come out negative this afternoon, it's going to be a bloodbath. We'll see. Fingers crossed. Sorry if you're in the US and you don't want your currency to tank, but I do. Afternoon, JC, Kennelly. I'm not biased. Do you have any idea which broker is able to trade US 30 at 0.01 lot? Pretty much all of them. I don't know any that aren't. Apart from maybe IG, because they're spread bets. But any broker. If you want to know, go and download a demo and just open up whatever instrument and flick through and see if you can trade in 0.01s. But they should say on their website what the lot increments are. Robo Forex, I don't know. Tick Mill, yeah. I mean, I don't know many that don't. There's not many brokers around that force you to use mini lots now. Everybody's micros because no one wants to trade minis or fulls. I had somebody contact me the other day about the opening range breakout EA. They bought the opening range breakout EA and their broker only let them trade in single lots. i.e. 1, 2, 3, 4, 5, 6. Not even in mini lots, 0.1, 0.2, in full lots. Like, well, change broker, for God's sake. They're forcing you to take only one lot in risk increments. Get rid of them. They're only doing that because they want you to over leverage. So don't use them. Use another broker. You can have more than one broker, yeah? So you can use a broker for Forex, use a different broker for stocks, use a different broker for indices, use a different broker for crypto. You don't have to have one broker. Have as many brokers as you want. Pick the right broker for the right instrument. I'm using Robo Forex because they've got virtually no spread on the DAX and tiny, tiny, tiny spread on these US indices. I've got other brokers who offer me all of this, like Axie, but Axie's spread on the DAX is 5 pips. I can get 1 pip on this. So, you pick the broker for the instrument you're trading. If you are concentrating on one instrument, find a broker that's got the best conditions for that instrument. Just got to do your shopping around. And obviously, whichever part of the country you're in is going to make an impact on that, or whichever part of the world you're in, obviously. So I don't think in the US you can use RoboForex. So you'd have to pick someone else, FXCM or someone like that. I don't know. Google. Just use a big one. Pick a big broker. Someone that's been around for a while. Could I share my financial juice settings? Does it have settings? I haven't got any settings. Financial juice. Oh, there you go. I've not changed it. It is what it is. It's FX, CNBC, Bloomberg. There you go. I'm pretty sure this is how it comes out the box. I don't think I've ever changed anything in here. All sorts of stuff you can get in there. Now you send me down a rabbit hole. Reuters. US dollar report. What's that? Doesn't look like it affects it. Might get new stuff coming in now. I don't really want, I don't really want a news overload. I literally need to know what the important stuff is in FX and the markets, basically. So, I don't know, play around with it. It's up to you. It's personal preference, really, isn't it, with that? But that's all I use. I've never even looked at this. I suppose, yeah, you can just go look, Forex. Oh, I see. Right. Okay. So that gives you just Forex. This gives you different feeds. Look, I see. I've never clicked on these buttons. Indexes. Just stuff to do with the indices. Look. I don't know. S&P Services PMI 50.1 on a 50.2. There we go. So that's the S&P PMIs. So we're interested in the ISMs. So they come out 15 minutes beforehand, but they are a good indicator as to whether you're going to get a positive or a negative. If the S&P composites quite often are very similar to the PMIs from the ISM Institute of... I've forgotten what ISM stands for. Institute of Services Management or something? Supply Management. There you go. I was close. So that's a negative on the S&P PMIs. Forecast 50.1. They got a 50.2. Forecast 50.2. They got a 50.1. Pretty much as expected, slight negative on one, slight positive on the other. So it's not a big hit, which is good. If we get an as expected, might tank it a little bit more, but we'll see. 15 minutes to go on that news. Right, indexes not really going anywhere. So 15 minutes of total chop on the Dow. The 5-minute opening range has just broken to the downside. So if you're trading the 5-minute opening range break, you've just triggered short. You didn't get a long on. I'm long on the NASDAQ and I'm long on the S&P at the moment. DAX is coming down. Annoyingly, if I hadn't have used pre-market close, I would probably be out of that with pretty much a break even. But knowing that, I would have done it, wouldn't I? So not a lot moving there at the moment. Afternoon, Harold. Afternoon, David. Could you please show if I've already done that? IC markets do not offer. Yeah, I mean, there was brokers. I don't know. You have to go and just have a look at brokers. I messed with my news settings and it was coming up with so much crap. I just wanted it back to normal. Yeah. Is there a reset button? I don't even know what it comes as default. So, I mean, there's probably a lot more you can have in here. That's FX. Stocks. Yeah, I mean, you can probably get a lot more. The problem is it's a little bit like indicators. Yeah, the more indicators you have in a strategy, the more paralysis you get from your analysis paralysis. The more news you get coming in, the more it sways your views one way or the other. It's like, you know, with the guys that come on the talking heads on Bloomberg TV, guy comes on and says, sell this. And you're like, oh, okay, I'll sell it. And then you're like, well, that guy just told me to buy it. And the stock price is going up. They've got earnings coming out next week. You've got too much information. You can't make a decision because there's only two things that are happening. Go up, it will go down. If one thing tells you it's going to go up, another thing tells you it's going to go down, you can't trade. So you just have to minimize it to what I class as the important stuff, which is what I think I get coming through on here. But I might be missing a key channel. I'd have to turn them all on and flick through them all and see what they give me and then decide. But I've never really played with it. I trust them to give me the core information, really, at the end of the day. EuroCAD 125 ADR. Still going. So there's loads of RSIs and ADRs lit up. Sorry, not so many RSIs, but loads of ADRs lit up. So we'll have a look through all of those. I just wanted to see if I was going to get a target hit on the NASDAQ this morning. Just because I'm conscious, I just want to get one of these to pay for one of these. And then if I can get a target hit on that, that cancels that out and then I can be done for the morning, for the day, basically. So I was just hoping that pre the news, we were going to get a hit on the NASDAQ. So I was just watching this to see if we're going to do that. But we seem to be stuck for the last 15 minutes on an inside bar. So that's the 5-minute post-market, and we basically haven't broken out of that level yet. Just worrying me that the DAX is selling off and the Dow selling off. Not looking like it's got a lot of volume, is it? We'll come back to that in a minute. We've got 10 minutes before the news. So we'll whiz through these. Oil, obviously, coming down hard. This is now day 1, 2, 3. That was kind of an update yesterday, but 4, 5. It's the whole week basically down. So this is a pullback on the leg. So we were looking for a 38 retracement. We've had that now. We're looking more like a 50. So watching this area here. So the previous month's high is this level here. That's what I'm looking for. If we can get down to there, which is about 150 ADR, which isn't far away, that's probably a good level to start a buy. However, it's OPEC day today. So at any point today, OPEC said we are going to open up production. We need more production and then price will tank. So I'd be wary about taking a position today unless OPEC say that they're going to constrain production, in which case then you'll probably find we'll get a rally. So it's coming down to a very decent level for longs where we are at the moment with oil. So it is extended to the downside, so you can wait M5, wait for a reversal alert, when the chart updates. In half an hour. Good. Might be a 4 hedge day today. Need more weakness on the US to give these indexes a rally. Kind of want it to happen before PMI though, which would be nice. But anyway, on chart. Right. So 5-minute reverse alert on oil is there. So this is ADR. So we're tapped into ADR. It's quite a big drop we've had for the last 25 minutes or so. So that would be your entry long, breaking above that level. And then hopefully we'll look for that pullback and continuation on oil. Aussie dollar CAD is hit to the upside. So with reversal alert on this one is just about to trigger. So this is ADR. Obviously, we've rallied straight into it. Tiny little flag break. So that's your first reversal alert of the day, about to go in on Aussie dollar CAD. Again, PMI figures probably, you know, if this PMI figure comes out, the Canadian candle could be like that. Same with the US. We could have a massive candle going in there, in which case you're going to trigger the alert. You're not going to be able to take it. So, but it's a nice extension. It's only just about ADR, so not the best in the world at the moment. Aussie New Zealand, this one's down at 125 ADR. We seem to, up at 125 ADR, not down. We seem to have stalled out. So the New Zealand dollar overnight rate was a freeze, which is what we were expected. And as expected, we got weakness in the New Zealand dollar. The Aussie is also weak because of its interest rate freeze that it had yesterday. So all we've done is we've had the weakness in the Australian dollar. Now we have that matched with the weakness in the New Zealand dollar. Sorry, the New Zealand dollar weakness matched with the Aussie weakness, meaning we're going sideways. So 2 weak currencies against each other, just going sideways. Your reversal alert triggered. Nice M pattern, but we haven't gone anywhere. So this propulsion gap is a target to the downside, but I would expect to find some buyers out of that. Aussie will typically be stronger than New Zealand dollar, even if they've both got negative news or frozen interest rates. So I'd look for that to go bullish. But it's going to be a pullback on this move. So target-wise, there's loads of places you can target to the upside, loads of propulsion gaps. But a push back into there and then rally up into there is the obvious thing to do. And then potentially come back down. So still looks good as a long. Not extended on RSI though, unfortunately. CAD Swiss, we know about. I'm out of the CAD Swiss now. That's probably going to keep coming down and tank to 400 ADR today because I'm out. Usually does when I get out. But that's that bounce off the highs. So yeah, coming down. It's an RSI extension. We'll be looking to get long on that shortly. There's more than a 38 retracement coming up for a 50 retracement. So looking for these propulsion gaps. These propulsion gaps you've got in here are not really propulsion gaps. That one, potentially, because that broke this entire range just about. So this is where the move started from. But by the time we get back there, it's unlikely there's going to be buyers left in the market. They're all getting out now. This is what this is. This is the profit take on the up leg. So I suspect there's a good chance this may continue to the upside. If that euro weakens, obviously the Swiss franc will weaken with it. However, if the US weakens, the CAD will weaken with that as well. This is why we're in such a mess at the moment and nobody knows which way the market's going, because everything has got a possibility of weakening because we've been strengthening so much off of interest rate rises for 18 months. There's only one way to go, down on interest rates. That will weaken the currency. So it's a case of who's going first. That's what we don't know. And this is why the markets are so erratic at the minute, because we're waiting for a clue as to who the hell's going to be the first one to do that, because that's the currency that's going first. And no one wants to go first, obviously. You don't want to weaken your currency. But at the end of the day, if you don't, unemployment's going to go through the roof. GDP is going to drop, which is going to drive off inflation. So someone's got to go first. We just don't know who. This is why we're in a bit of a quandary at the minute, because there isn't any real way to gauge a fundamental bias on anything at the moment. So that's coming down. So this could well be a pullback on a leg up. It could be the start of a bear move from the Canadian dollar. Either way, If this gets extended, they will need to take profit on that move. Even if they're going to go like that, usually there'll be profit takes along the way, so you just get out as you go. Swiss yen, we've got 3 minutes to go. I'm going to whiz through the yens. You know my feelings on the yen. I don't care how extended it gets. Don't basically buy, but selling, yes, fine. So Swiss yen, sell it at ADR. No problem with that at all. Euro CAD, big extension to the upside. I am long on this at the moment. I'm just going to trail it with a 130 trailer. Great, it's gone right on top of my buy. So trailing that. Okay, hopefully that's kicked in for both. Yeah. So if this news comes out negative on the US dollar, hopefully we will get a rally on the Euro CAD, because the CAD will probably weaken along with it. If it comes out as positive, we're going to fly down. I'm out. I'm just going to bank whatever I've got there. So Euro CAD, that's extended to the upside. So again, we're extended up to 125 ADR. It's probably going to start to run out of steam and want to pull back a little bit. Whether this is going up or down is going to depend on what this result comes out as to with the US dollar and obviously with the CAD and oil. So I have no idea where this is going, but it's a good mean reversion opportunity today. Your reverse alert is just about to kick in. 1 minute to the news. Just about to kick in as the news hits. So either if this doesn't trigger now, you're going to get triggered on the news potentially, or it's going to fly away and you're not going to get an opportunity, because that'll be such a parabolic move. You won't actually get a reverse alert today. So we're trading around news. You can't really make any decisions. So we'll just watch this. I will watch the Euro US and we'll watch the Dow. $22 seconds to go. We'll see where we go with the PMIs. This chart isn't updated properly. Hopefully it'll update before the news. No. There we go. Euro coming down looks positive US or negative. Can't really tell. As expected. It's 0.1 percentile positive, so it's an as expected result. Not a lot of direction that at all. Stopped out on Euro CAD, flat on that. Stopped out on the news, basically. It's unfortunate. So that's an as expected 53.6 on a 53.5. So what we were expecting, basically. So it's not positive, it's not negative. So we'll see what the market makes of this. It looks to me like the US is trying to rally. The indices are getting hammered a little bit, but equally, it's not really going anywhere, is it? So I think we need to give this 5 or 10. hedged on the S&P. Well, I'm not hedged on the S&P. I'm about to. There we go. Now I'm hedged on the S&P. This looks bullish US. So it looks like we're going to get a run on the US dollar. So everything will start to come back down again and start to reverse a little bit on what we've done today. So a little bit of strength coming through now on the US dollar off the back of that news. So they'll be looking to undo some of the move from today. Obviously not against the CAD, but all the move we've had today, they'll just be undoing some of this. So hopefully we just get a pullback on today's move and we end up with a bull day. If we end up with a bull day against the US dollar, obviously then we should get a continuation, but we'll see. So yeah, negative indices. That's a full hedge for me today. So this is probably going to be a 4 losing day, unfortunately. We'll see. So targets wise, so for the indices, yeah, I mean 5R for me on this on the NASDAQ. Yesterday's low is the pre-market low. Yesterday's low is here. I haven't got why have I not got the period separators? Vanished. Really throwing me. So that's yesterday's low. We tapped down through that yet today. So to the downside, if we do break to the downside on the NASDAQ, I'll be looking at the pre-market lows today for a bounce. We've got this propulsion gap as well, so I'll pay attention to that area. If it breaks to the upside, obviously I'm just going to hit TP and I haven't got to worry about it. So I'm not hedged on that yet. We'll see where we go. The Dow, downside is those pre-market lows. So I'm just going to move TPs up to pre-market lows, which is 4R. ADR is all the way down there. So I'm going to look for some kind of limit order bounce at the lows. We may even get a propulsion bounce. So we'll see what happens. But somewhere around here, I'll be looking for a bounce to try and get out of the Dow. S&P, again, same thing. Your pre-market lows. And then we've got ADR down there. So if we get down to there, look for a bounce. If we push through to ADR, hopefully we'll get a bounce out of ADR and I'll be able to get out of them on a little bit later. But the NASDAQ is still holding up at the moment. Let's see where we go. Right. Where did I get to? Euro CAD. I think I've done that because I just got out of that one. Yeah, so Euro CAD I've already done. Euro Pound, we got an ADR hit on this one, which has just bounced. You just had a reversal alert. So this happened just as I came on. There's your reversal alert, potentially for a reversal back up into propulsion, up into here. So that support resistance, I'd look to get out somewhere around there. Euro New Zealand and Euro US dollar. So both of those are hits to the downside. Hits to the upside today. Not really going anywhere, the Euro New Zealand and the Euro US dollar. Obviously, as we can see, the US dollar's powering up now. So you've just had the reversal alert. That reversal alert happened just as that news came out. So if you're using the EA, the market reversal alerts EA, it would have got you in exactly there and your quid's in at the moment. But if you're not using the EA, it's debatable whether you would take that just before the news, but we'll see. I still think there's upside on this. I'm long at the moment on the Euro US from the reversal alert yesterday overnight. That was the RSI extension. You can see I had one on there, which I got out of. We pushed up, we pushed straight back down again. So the volatility you can see is entering back into the market now. We've had lots of sideways crap. We're now starting to pick up volume, which is great. Back to normal, hopefully push-pull market conditions. So yeah, just pushing back into that propulsion gap at the moment, potentially to come out. So not the greatest reversal in the world from ADR, that one at the moment. Pound CAD we know about. That's a massive push to the upside. Flat on that now. Lovely reversal alert we've just had. Huge drop down into there. You want to be looking at somewhere between a quarter to a half an ADR as a target. Half an ADR on this is 47. That is 65 back into that propulsion gap. So that's 3/4 of an ADR just down into there. So that's easily achievable based on that speed of movement. So nice reversal alert there, just taken. It may come up and retest it. So just look for that M pattern reversal potentially. It may not get anywhere and it may just come down and collapse. We'll see. Pound yen extended to the upside. That's already triggered an alert. I haven't got a problem taking anything short against the yen, so that's a nice entry. Don't care how strong the pound is. If that yen does power back up again, we'll be coming down. So you'll be looking to come all the way back down into there. So that's a good little reversal to take. Pound New Zealand stuck a little bit at the highs. So this one, basically, we just had a reversal alert. You've already had one on this today. No, you haven't, sorry. Yes, you have. There. So that was a reversal today. That entry there. And you've just invalidated that high and taken a second entry there. So pretty much the same level, basically. Whichever you've done today, the ADR is pretty much the same level for the entry. We've got a weak New Zealand dollar. Pound isn't particularly strong today. It's stronger, which is why we pushed up a little bit more, but no real strength on either of those. So could or could not come down. Not the greatest extension in the world. It's only 100 ADR, but New Zealand dollar CAD nicely extended to the upside. Reversal, that's just gone on that one. New Zealand dollar is weak. Canadian dollar's been nice and strong. Well, Canadian dollar's been weak as well, rather. Hence, this obviously completely undone itself. For the New Zealand dollar to be weak all day and beat the Canadian dollar shows you how weak that CAD is. But that's all flipping now on this US dollar strength that we're getting coming through. So nice little reversal alert gone in there. Half an ADR is 31. That's 20 back into propulsion. That's 30 down into that propulsion gap. So if we're going to continue a move to the upside, we'll be looking for a pullback, which could go into either of those levels, really. So targets to the downside there. And US dollar Swiss. New Zealand dollar Swiss has just hit ADR, literally just hit. You guys tapped into that one. I'm short on the New Zealand dollar Swiss at the moment, holding that. And US dollar Swiss as well. That's already bounced out, look. So there's your reversal alert just gone in on that one. So be looking for, hopefully, pullback and drop. So if you're going to get long on it, that's quite a big stop if you're using a stop. Half an ADR is 36, which will take you up to... You're going to need to pull back all the way into the Asian Open, basically. So pull back into there. Hopefully for another down leg on the US dollar. News-wise coming up, we've got US unemployment tomorrow. I was going to see if there's any euro. There's no euro news. Currency reserves. Probably won't do anything against the Swissy. So that's it for the ADRs. RSIs, there's a couple, same sort of thing. Everything, whenever you get any hourly RSI extensions, a lot of the time you're going to find you've got ADR extensions and vice versa. So the hourlies, we've got the CAD Swiss extended to the downside. Just got in long on that one. There's my first long, just gone in. So out of the shorts, in long. Not going to get greedy on this. Even a target, is it? Yeah, be happy with 1/3% off of that. Euro CAD, big extension to the upside. That's extended, not quite above the 75 level yet, but it's an ADR extension and potential pullback. We've also got this potential propulsion gap to come and test at some point in the next week or so. So likely we'll come back to there. And pound CAD, again, extended above 75. I should be getting short on this, although I think we might have missed it. Yeah. So the extension doesn't quite tie in with the reversal alert. The extension hasn't triggered. The reversal alert hasn't triggered because the levels on the RSI weren't there when the reversal alert went in. So that reversal alert happened before the RSI hourly candle close. So 10 minutes before it. So don't get the entry because the RSI was not extended when that happened. But yeah, nice potential short if you want to take that one. There you go. Let's have a quick look at where we are. So I'm hedged across the board. Just going to move those NASDAQ targets up. Oh, what a nightmare day. It's weird at the moment. FX goes really well. Indices go bad. FX goes bad. Milk the indices. All I want is the two of them to line up and I can absolutely just have an amazing week and then just go, yeah, whatever. I'll take the week off. Nothing's working at the same time at the moment. So upside target. I mean, ADR is here. I think we'll find it hard to get far beyond ADR today. That US dollar is going to have to really drop hard for us to get any further. And we've just had news which has kind of rallied it. So upside target, I'm going to bring down into the middle of that propulsion gap. Propulsion gaps often get tested 50% and you get a bounce out of them because this is where the sellers started the position. They typically add into the position before it gets back to the source of the move. So I'm going to target 50% of that as an upside and see if I can get an exit off of that. Dow upside. I mean, ADR for that propulsion gap. Don't see any reason why. Potential to test this area. So we move up to the upside, I'll get out there. When we go to the downside, I'll get out there. And S&P. One of those days today. Super hedgy. I've got this, the EA basically, I'm just writing the manual at the moment. I've been writing the manual all morning. All morning. So I'm hoping to have the manual finished tomorrow morning. I'm not going to get it done today. I might do. If I do, I'll press the button and launch it for MT4, not for MT5. Haven't even started that yet. So this EA will get released as soon as I can get the manual done. And then I need to do a video because most people can't be bothered to read manuals, but they will listen to a video for half an hour. So I'll do the video as well. There we go. So hedged on all the indices. Oh, a crap day. Anywho, a lovely day over here. So everything's pulling back at the moment. So wait for these pullback legs and then jump in on the next legs down on the US dollar, hopefully. So next negative news for the US dollar. I'm using these terms now because I'm expecting this to be nothing but negative news from here on in. Oh God, the factory orders are up. Is tomorrow afternoon, 1:30. So before the market opens tomorrow, we've got unemployment claims for the US. So hopefully tomorrow, the unemployment basically today has come out as 89K off of a 154 forecast. So the employment change was massively down. The unemployment claims, seen as there's not as many people being employed, you would expect to be up. And unemployment claims up is negative for the currency. So they're forecasting a slight rise. We can get a big rise, i.e. 250K upwards tomorrow. We'll get a lovely big negative move on the US. And then we're running into the unemployment rates on Friday. So if the unemployment claims are up, the employment change is down, you would expect the unemployment rate to have risen, which is negative. So we'll see, but it's all pointing at the moment. I mean, we haven't got that figure yet, but this is certainly pointing towards a potential drop in the US towards the end of this week. But we need the figures, so it's looking hopeful. We'll see what happens. US dollar CAD ADR. US dollar CAD's off. US dollar Swiss rallying. US dollar yen not doing a lot. Really stuck, isn't it? Market's in shock. So don't want to touch this today. In a minute. But what's happening with bonds? US government 10-year are at 4.7% presently, driving stocks down and making government debt servicing more expensive. If you say so. I don't pay any attention to that. There's always an if and a but, isn't there? For everything that I say, someone else will say something else. Can't pay. If you pay attention to all of it, you're basically a bank analyst. And if you are, then you'll be earning 60 to 100 grand a year and you won't be trading. So if you follow absolutely every fundamental that moves a currency, you need to go and do Anton Kriel's course, and then you will be really tied up in spreadsheets for the rest of your life and you'll never take a trade. That's what I found anyway. But yeah, bonds do affect the markets as everything else does. So I just don't pay attention to the bonds. I was taught by Mr. Creel that bonds were one of, I don't know how many spreadsheets. I don't know, where are we? I'll show you because it is quite interesting stuff. God, what do we look at? The distribution analysis or the endo? Let's look at the endo. Actually, US dollar and probably the best one to look at. So this is a scorecarding system. This is similar to what you'll see in a bank. You can't see all the tabs on the bottom, but there's a lot of them. And they go on further. Yeah. Oh, no, that don't. No, that is all of them. So you've got things in here like market cycles, ISM. So this is your ISM PMIs, NMI, CSI. This is the University of Michigan figures. Building permits, M2 money supply, interest rates, CPI, which is obviously inflation. There's another type of inflation. There's another type of inflation. There's another type of inflation. Non-farm payroll, government bonds, T10, which again is the government bonds, CBBS, and the GDP figures. This is basically a scaled down scorecarding system. Yeah, this is scaled down. Yeah, look at my website, and then you'll realize how unbelievably scaled down my scorecarding system is based on what Anton Kriel teaches, who used to work in banks doing analysis for the banks. And this is a scaled down version of what the banks used to use. Yeah. So when you start paying attention to all of this, you come up with a score at the end. You can't probably see that, but that says 51. That's neutral. So you do all of this work for one currency. Then you do all of this work again for another currency. And then you combine these two together to give you a score. And that score comes out as 51 on a scale of 100, telling you not to do anything. Welcome to the world of fundamentals. That's why I stopped using them. And that's just one spreadsheet. Yeah, I've got 1, 2, 3 spreadsheets for each currency, and then a cross, what's called an endo-exo analysis, which is a cross-currency analysis, which is this one. So this is the US dollar, Australian dollar, so Aussie US. Yeah. This is the overall score, but this is a combination of all of that work done on multiple currencies. And you've got to do this on pretty much on a daily basis. Yeah. So when you start talking about bonds and stuff, yeah, I know they have an impact, but my God, you'll never take a trade if you analyze it all. Paying attention to everything. Yeah, exactly. This is, it's the same. We were talking about it the other day, weren't we? About moving averages. Somebody mentioned moving averages in here. It's like, oh, it's bouncing off the 200 or the 400 or the 500 or the whatever. It's like, I've just had a beautiful signal to go short here at a double top. There's been a reversal alert. There's been 3 wicks to the upside. It's a double top. It's a double top from a previous double top. There's a load of volume coming in. The RSI is extended to the upside, but my moving average says I should be going long. What are you going to do? I don't know. Just get in. Yeah, because there is never, ever going to be a case where you will go, I'm going to buy it because this said that. There's always going to be another thing saying, don't do that. Yeah. RSI is extended to the upside. Yeah, but there's a possible intervention coming. ADR is at 225%. Yeah, but you're above the moving average. Shouldn't be selling it. We've just hit a double top. Yeah, but you've hit it twice before. The third time it hits it, it normally goes through. Everything you do in trading, there will be a thing telling you not to do it. Every time. There is no system or strategy that does not have a counter system or strategy. Look at the breakouts that we trade with the opening range. Yeah, there's an opening range breakout to the upside, straight into resistance. I don't want to take that because it's going to hit resistance and bounce. Why? Because that's what it did there. There's always a reason not to do it. You just have to do it and then look at it and think, did it work? Yes. Excellent. Didn't it work? No. How should I deal with this? Because otherwise you'll never take a trade. And every trade you take, you'll lose faith in your system, because every time you take a trade and your system works, you'll be going, hey, every time you take a trade and your system doesn't work, you'll be looking for an indicator to cancel out the reason that that one didn't work, which means you have another indicator on your chart telling you to do something against what you should be doing, which is taking a trade, get into the market. You've no idea where it's going. So at the end of the day, you need a reason to get in. If you use a set of instruments that work half the time, 3/4 of the time, you've got half a chance. Yeah. When the RSI gets extended, most of the time we get a pullback from the banks. Some of the times we don't. Do I go, I'm not going to bother taking that one because? No, get in. Because I don't know if it's going to go up or down, but I know that most of the time when the RSI gets extended and we get a reversal alert, it goes down. However, if there's a lovely resistance there, that's another reason to get in. But if I'm above the 24 moving average, I don't care. Because the 24 moving average is telling me what happened 24 days ago. It's got nothing to do with right now. Banks are going to decide what happens next, not the 24 moving average, the 200, the 500, the bond yields, which are at 4.7% presently, but might be at 4.1% on Friday. Then what are you going to do? Well, the bond yields have dropped. Definitely don't want to be doing that. But what if that other indicator has gone down and it tells you to do that? You can't win. Yeah. This is why the markets work. Every time I come in here and say, that looks like a good buy, someone comes in and goes, no, you shouldn't be buying that. That's a definite sell. Excellent. Because if I want to buy it, what do I need? An idiot on the other side to sell it to me. And if I'm wrong, brilliant, you win. But I'll be right at some point. And if I'm right, you lose. No problem. You'll be right at a point later on. This is how the market works. It goes up and down because there's buyers and sellers and they don't agree with each other. Simple, isn't it? Just get in, get out when you get profit. For every strategy, there's a counter strategy telling you to do the opposite. Therefore, get in, get into profit and get out. Exactly. The more I listen to you, the more I feel sorry for the rest of retail trading. It's truth, isn't it? Think about it. I don't teach crap. I teach what happens. I've been doing this a long time and I've seen I've said every strategy under the sun. No one can throw any indicator at me that I haven't looked at and I haven't disproved. And everybody sends me strategies. I had somebody the other day send me a strategy. And it basically was a whole moving average, but it was colored differently, called something else. And I looked at it and I was like, well, that's a whole moving average. Doesn't work. But it's better than the normal moving average, was the argument. Well, yes, it is better than normal moving average, but it still doesn't work, does it? Because what it's telling you is what price has done. What's that got to do with what it's going to do next? Nothing. Because you just, like this morning, we were looking at the US dollar going, holy crap, this thing's been going forever. It's never going to come down. We were looking at the yen, US dollar yen going, holy crap, this thing's been going forever. It's never going to come down. Yesterday, it dropped 400% of ADR. You think the guys buying it off the moving averages, the guys that bought that moving average bounce there, yeah? Do you think they're happy today? Probably not. Look at this on the 4-hour chart. This is, well, you're not going to get a 24 bounce, are you? But a load of people saw that and probably have bought the crap out of it. Why? Because it's a pullback in an uptrend. Yeah, because they've never looked at financial juice. They've never heard of an intervention from Japan, and they've no idea what's going on in the markets. However, they might be right. But are they right because of that moving average, or are they right because the market decided to drive it up? That moving average isn't why the market might drive up. That moving average is there because for the last 24 days, price has been going up. The fact that price pushed into it and pulled out of it has got nothing to do with anything, has it? And all the other guys that are using the 9 MA yesterday saw it close below the 9 MA. What did they do? They went short. Why? Because when it closes below the 9 moving average, price comes down. It's a trend change, isn't it? 9 moving average cross. But then everybody that's trading the 24 moving average bounce is going long. The guy that's selling the 9 is buying from the 24 guy. Who's right? Don't know. The banks will decide tomorrow. Doesn't matter what you look at. It really doesn't make any difference. Press the button, flip a coin, hope, hold on. When it's green, get out. When it's red, deal with it. That's all you can do. That's all the banks do, because they don't know which way it's going, do they? If they knew which way it's going, they would always go that way, in which case then the market would never go in any other direction but the way that the banks wanted it to go. And if there are 10 banks that all need to make money and they only go one way, they can't make money, because the only way they can make money is for it to go the other way, which means other banks need to push and pull and push and pull. That's what market structure is. Banks pushing and pulling. Who's this? The Bank of Japan pushing. Who's this? The Fed pushing back. Who's going to win? Who's got the biggest bank balance? That's who's going to win. Crude oil inventories, 2.24 negative of 0.5. That should be a rally in the oil price, which will be a rally in the CAD. So crude, the actual barrel count is 2.2 million less than forecast, which means there's less supply. If the demand is the same and you've got less product, prices go up. Normally. Either my chart has, my chart's frozen. I was going to say, that looks like it's moving very, very slow. I haven't got oil on here. Wait for that to come back to life. We'll see where that's gone. We're at 125 ADR, still coming down. This is the problem with oil inventories. They don't do what they say on the tin, do they, a lot of the time? But so not a lot of impact on that oil news. So it should be good because it's a negative number. Oil inventories down, prices up. But not a lot of attention being paid by oil. Bowman's just been speaking. No comments on interest rates. No other news. Right. Okay. There's nothing much else to look at today, so I'm going to leave it there. Just managing everything that I've got on at the moment. Still got pound US dollar in drawdown. Waiting for some US dollar weakness, obviously, which started today. We've had 2 moves on this now. Today, why are you not zooming out? Today and last week. So this was the first pullback that we had last week into Friday. That didn't work. We came in and put in a new low. We've just put in a second reversal alert now. So if we can get a pullback and a push, that would confirm a market structure break back to the bull side, i.e. US dollar weakness. So we've got 2 days of news coming now for the US dollar. We need negative news. And that will basically confirm this move back up, obviously, or move down rather, on the US dollar, and everything else moving up against it. So I've still got a fair bit of work to do on this to get out. But I'm just holding at the minute, waiting for some weakness to come through. So this month is going to be potentially quite tricky if we don't get that US dollar weakness. Not a lot I can really do about it, but continue to scale out, which is kind of why I'm banking regularly at the moment. I'm just trying to build a bank up here so that I've got some ammunition to deal with this drawdown. So I'm just regularly banking stuff that's getting into profit, sticking it over here so that if I need to, I can deal with it. I've got an 8% deficit to make back from last month at the moment. So I'm holding out on that video that I said I was going to do, or rather blog. I haven't decided if it's going to be a video or a blog post yet. So I've taken screenshots of last month's P&L. Yeah, that was how it ended up. Yeah, so I've taken screenshots of last month's P&L and the positions that were open and how everything ended up. So I will go through and cover last month because it was a shocking month last month, and look at why it happened. I know why it happened. I've analysed it already. But what I want to do is I want to kind of get a little bit further into this month. US dollar looks like it's weakening. Starting to weaken. I want to get through this month a little bit to see if I can get out of this pound US dollar position, just so that I can give the full move, if you like, and use it not just as a this is what happened last month, this is what I was expecting to happen, this is what we got, and also this is how we got out of it scenario, so I can give the complete picture on the move, because it's a 3-month move potentially. Yeah, so I got into this pound US dollar on the 19th of July. We are now October. Yeah, so what I'd like to be able to do is show the entire cycle of getting out of the position and the loss. I'm not looking to get out of this in profit. Yeah, I'm looking to get out of this. It's a loss. Can't get out of it with a profit. I could hold it and hope, but you don't make money hoping. Yeah. So I'm looking for an exit basically on the position. So I'd like to be able to do that. And then I can say, right, this is where it went wrong. This is why it went wrong. This is the stuff that we should be concentrating on, definitely not doing. And this is why, because this is the impact it has. This is the move as it finished. If I hadn't have done this, this is what the result would have been. Yeah. So use it as a kind of a learning process of, I was an idiot last month because of what I did. This is what I should have done. But also, you've also got to factor into it we've never had this situation before. ever. So what do you do? Yeah, it's like anything. Think of it like the founders who, went out and discovered America. They'd never been to America before. They had no idea what they were dealing with. A load of them got killed by animals but they'd never seen before because they didn't know they had teeth. Yeah, I've never seen a contraction in September after a contracted August after a pandemic where the stock market's rallied on everybody losing money. Never dealt with that situation before, and especially not after interest rate rises have gone up for 18 months, which is a record. Yeah, all these situations, everything goes together to make a learning experience. You're always going to get points where you've never had that before, so you don't know what to do. Same with the yen. Some people yesterday saw their very first US Japan intervention move. I've seen not loads of them, but I've seen 5, 6 intervention moves before. I knew this was coming. I was expecting it. I was waiting for it, and it happened like yesterday on air, didn't it? But if it's your first one, you now know next time the Japanese say that, you know what's coming. You know how to deal with it, don't you? So you've got to learn from experiences, whether they're good or they're bad. The best way to make yourself a more profitable trader is exclude your losses. Get rid of the losses because the profits just look after themselves. All this stuff here, yeah, I haven't had to do anything for any of this. This is just stuff. I get in, I wait for it to get into profit, I get out. I don't need to do anything. I just sit here and wait for this to turn green and I pop it down there, pop that down there, pop that down there, pop that down there. Just do that. The only thing I need to deal with is stuff that doesn't go right. That's the learning curve. Remove that as much as possible. That just gets greener and greener and greener. Don't have to worry about it. So I'd like to use the whole cycle if I can. And if it takes 3 months for that whole cycle to play out, i.e. I need to wait another couple of weeks, I think that's the better thing to do. And then we can see the whole thing in one big move, can't we? So, but yeah, anyway, if I can get back to 8% this month and get that flat, that's last month eradicated and we can move on with the rest of our lives. Basically, that's what we're looking for, isn't it? How the hell did you get out of that and get your money back? That's what we want to know. Right, so I will leave it there today. We'll see what happens with this yen. So far, absolutely nothing today. I'm quite surprised, actually, that we haven't had any further movement on it, but it isn't going back up. And this US dollar news that we've just had isn't necessarily holding. So we're not necessarily going to continue this strength in the US dollar. This could easily just weaken back and we'll be flying again today. So we'll see what happens tomorrow. But at the moment, all we've got is sideways. So I'm going to hold all this US dollar yen because this is a big part of how I'm going to get out of this pound US dollar, hopefully. Is going to use all this to offset that, which is why I'm holding it. So we'll see how we go. If you had to trade a challenge, but the rules required you to trade manually, what strategy would you use? Depends what the challenge is. What's the challenge? Because you're gonna trade differently depending on what you've been asked to achieve, aren't you? If the challenge is make as much money as possible in the next 24 hours, I'll be trading the 1-minute charts with 20% risk. If the challenge is to return a percentage on your account, I would probably use position trading. If the challenge is to make as much money as possible in a month, I would probably use ORB with 1.5–2% risk per entry. Standard 8% target, yeah, ORB then. If you're asking to pass a prop fund, I'd use the opening range breakout strategy. But not because I think it's the best strategy, because you've got a drawdown limit. Yeah. If you ask me to hit an 8% target every single day of the week, I would say position trading. It's rare I don't make 10% a month position trading. Rare. Very rare. I say it's very rare. It's actually about 1 in 10 months I don't make 10%. So it's not rare. It's 1 in 10, 10%. It's rarer than most, isn't it? But if you said to me, I want you to make 8% a month, but I only want you to lose 4%, I wouldn't use position trading. I'd use ORB, and I would probably either pass or fail. I don't know. It's not down to me, is it? It's not down to me what happens. It's down to the markets. The markets decide whether you make money or not your strategy. Your strategy is a reason to get in or out of an entry on a trade. Strategy just makes you press a button. Whether you make money or not is down to whether the market moves in the direction of the button press. So it doesn't matter how many times you have a support bounce. You could look at a support RSI. I'll use this as an example before I go. If you go to the 4-hour chart, scroll out and stick a line at the 85 level, right, on the RSI. Somewhere around there. And you stick a line at the 15 level. Somewhere around there. Yeah. If you only ever take a trade when that gets above 85 or below 20 and you hold it for 2 ADR, you will have 100% strike rate. Yeah. You had one trade there. You had one trade there. That's it. Yeah. What's going to happen when this does that next time? I have no idea. At the moment, I'm 100% convinced that is going to come down by a couple of ADR. However, if you go and look at another instrument and repeat that process, probably not a good example of the pound because of Liz Truss, but we haven't got one there either, have we? Got ish 100% strike rate again. But here you go. That's Liz Truss again. Stop picking pound pairs. Right. I've got an entry. I'm trying to prove myself wrong and I'm struggling. Here we go. This is better. So you got an entry there, which worked. You've 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 got an entry there, which pulled back and didn't work, and then it did. So I'm assuming we're using a stop loss. Yeah, we're using a typical stop loss based strategy. There's a loser. Just kind of hit it. That one pushed up, it didn't come back, and it did work. So there you go. So what's that? 1, 2, 3, 4, 5, 6, and one loser. What should we call it? Let's call it an 85% strike rate. Yeah. You see what I mean? There's nothing that tells you what is going to happen in the future. Up here, because the last few times we've looked at it, we were expecting it to come down. What it actually did was pop down, push up, and then come down. That was a loser. Yeah. And I'm using an extreme strategy here, which you are only going to get 1 or 2 trades a year out of, right? But when it gets up to this level, you could have, as it gets to that level, something like the Fed saying, holy crap, we've really got a problem, guys. I'm sorry, but we've got to put another 2% on our interest rates. You shorted it there, and it goes pop. And just as it gets to there, they announce that there's a new wave of COVID just hit. And I'm really sorry, guys, but the old vaccines don't work. Pop. Off it goes. And all of a sudden, you've hit a new high you've never hit before. Right? So there's nothing that tells you what is going to happen in the future. You can prove a strategy as much as you like in the past. It will never have a no failure rate. So when you take a trade and you say, I want an 8% target, I can show you a strategy that will definitely be able to pass that for you. But I can't tell you what the drawdown will be. I can't tell you how long it will take. I can't tell you when the trades will come. And there's lots of other things I can't tell you. And I can't tell you whether or not every time you get there, it's definitely going to work. Yeah. So all I can tell you is what I've experienced and what the back testing shows. But the back testing is only showing you what's happened in the past. When you look at COVID, why can't we go back to, oh, hang on, where's COVID? Why can't I go back to, why can't I go back to COVID? Weird. Yeah, so look at the RSI, yeah? Look at this, the strategy that I just told you about. You sold it there. Oh, crap. Never experienced that before. There's always going to be something that doesn't work. Yeah. On a daily time frame, you're going to get like one entry there. One entry there. That didn't work really much, did it? Sort of, but you see what I mean? It's just the answer to the question is you can't tell when, you know, what strategy you will use to hit a specific amount of money, because the day that you start your strategy is the day you need to measure from. Because if I start an evaluation, for example, to hit a target within a week in a trading competition on a Monday, I'll get a totally different result to if I'd started it on a Wednesday, because Monday's results won't be in there. And if Monday's results were 6% rise, when I start on a Wednesday, I'll be starting at 0. If Monday's result were a 6% loss, on Wednesday, I still start at 0. If I start on Monday, though, by the time I get to Wednesday, I'm either 6% up or down. Yeah, the market does that. If I'd have known that that was going to happen, I would have started on Wednesday. But you don't know what's going to happen. You don't know what's going to happen in the future, do you? You only know what's happened in the past. I'm not making a lot of sense. What I'm trying to say is no one can tell you, basically. So you just trade. I didn't have any clue that we were going to get hedged on everything today. If I had, do you think I would have taken any of the trades? No. Whippy mess. Where's it going next? Not a clue. It looks like it's going down at the moment, but again, what we were talking about earlier. It's coming down at the moment, isn't it? But where's it coming down into? An area you do buy from. So what do you do now? You just have to not think about it and press the button. Do you think the propulsion gap is going to hold? Yes or no? Yes, press the button. No, don't press the button. What happens after you've pressed the button is important. That's it. All you can do. It's funny, Bank of Japan still swept the highs before the drop yesterday. They didn't sweep the highs yesterday. The US dollar rallied yesterday, and the Bank of Japan said, if you rally, we will kill you. The US were warned. That was the reason, the intervention. Remember, we looked at this yesterday. We said yesterday, saw that rally happening on the, you have to look on the 15-minute chart to see it. Oh, stop moving. You can't really see it because of the intervention, look, but can't see it. But we said, if they rally again and break the highs and push, the Bank of Japan will intervene. And as that rally was going on, I went over to Financial Juice and said, look, this is what they said about the volatility. What we're getting right now is the volatility. If they keep doing this, and then literally it happened, didn't it? It's the volatility. So it wasn't the Bank of Japan. This was the US dollar rallying. All the US dollar pairs were rallying at the same time. I don't know why. You know, this is the thing. This is the thing that I don't get about intervention, and I don't think I ever will. It's a little bit like if your parents say, don't run across the road without stopping and looking both ways. Yeah. You know, if you do, there's a good chance you're going to get hit by a car, right? The Bank of Japan said to the US on multiple occasions, don't do that or we will shoot you. And for some reason, and this is the bit I don't get, they're like a stupid child. They keep doing it and they don't expect it to happen. They did it 3 times last year and it happened every time. And it's not as if they haven't been warned, is it? I just don't get it. It's like to move this up, there is no way to move this up apart from the banks buying the US dollar currency. So the banks have to be offside on the position. They can't be in anything but drawdown. So why would you do it? This is the thing I don't get. When the Bank of Japan turns around and says, if prices move up anymore, we are going to intervene, i.e. drive prices down and put you all into drawdown, the first thing I would do as a bank is sell the crap out of the US dollar yen. Yet what do they do? Bought it. And they wonder why they're in the hole, panicking. Just don't get it. But if you look at the US pairs, what time did it happen? 5 o'clock. So it's 3 p.m., wasn't it? Hour after the open. Yeah, so 3 p.m. yesterday. See, there was a rally going on. Look, Euro US dollar coming down. So this was US dollar strength. They're just stupid. And then I don't know who's more stupid, the US or the Japanese. Then for the Japanese to come out and say, we are not going to comment as to whether or not there was any intervention. Really? So that just happened out of the blue, did it? What do you think we are? Stupid? Anyway, all good fun, isn't it? So I was just looking to see if oil's moved. Yeah, oil's moved a little bit further. So that oil inventory, oil's not paying any attention to the inventories. It's still dropping. So we are now at 125 ADR on oil. Still coming down. XR.news holding on, still hoping for a second yen intervention down. Definitely. No losses, minor wins, insignificant after yesterday's stop outs. Don't use stops. If you use stops, you're going to get stopped out. I keep telling you. You keep using them. You keep getting stopped out. Silly. Stop it. Stop using stops. You won't get stopped out. So yeah, hoping for that intervention continuation move. So the reason I'm a bit worried about this is I just don't like where it stopped. If you get rid of the profit take move they did on it, we actually stopped at a support, which is weird. I don't like that at all. It's just I want this broken to show me that these guys have added and they are definitely in charge. At the moment, I'm not seeing any confidence in the Bank of Japan. It's almost like the first intervention, and you know what happened after that one. So a bit worrying, but we'll see. I'm still in profit on it at the moment. I'm monitoring it literally like a hawk over there. It's on that monitor, and I'm keeping a very close eye on it. US news reactions are extreme. I am managing my US dollar yen. I'll let you know when I close them. Thank you, Keith. I'll be waiting to hear. If I was you, I'd hold them for the next couple of weeks, because if it does go, it's going to not stop. It won't stop. And it will also drive the US down as well. So everything else against the US will start to rally when the US dollar yen comes down, because the yen strength will weaken the dollar. So we should see a cascade effect starting. I was kind of hoping it would start today, and it looks like it has, to be honest. If you look at all the US dollar pairs, yeah, we've got reverse alerts across the board. So, it's got to come down to go up. So, but, the market, no matter how many times you think this market was going to stop, it will always push another leg. So every time you go, oh, this has got to be it, it goes, no, I'm not done, and it will push harder. So does what it does. Just looking at the wick on the 15-minute sell-off, figured it would just drop from 150 like when the Swissy depegged. Yeah, that was a bit of a different thing on the Swiss depegging. That was more caused by bankruptcy. That was algorithm. That was just a nightmare. That was just banks and institutions going pop. Brokers going pop. Everyone just went pop. Dead. Do you still compound your account? No, I've never compounded my account. I have a fixed amount I use to trade with, yeah. Compounding doesn't work. Reason is you need to pay yourself. So you could take a percentage of your profit, but at the end of the day, you're going to struggle to do that. So this is why compounding always blows your account. It's a little bit like martingale. Because when you compound, there's two ways to compound. You can compound slowly by growing it by 5 to 10% a month, which is great. So in a year, you'll have 100% of your account, which is fantastic. So if you've got a 100 grand account, you've made 100 grand. But then what do you do? Pay the mortgage with that 100 grand. So you take it out and you stay at 100. The other way is to compound an account, is to put 10, 15, 20 grand into an account and use 3 to 5% risk per trade using a stop loss, and try and really double that account fast, which is like martingale. You get a losing run of 10 trades and you're risking 3 to 5% a trade. You've lost 30 to 50% of your account. You're then sitting on half the amount of money to try and achieve double the goal. There's people that are selling compounding courses out there and they tell you they don't work. Not mentioning any names, somebody probably will. There's a guy selling a compounding course for $1,000 who sells it as a this doesn't work, and most people lose their money. People are buying it. I don't understand. Compounding works in a spreadsheet, but compounding doesn't work in real life because as a trader, you need to pay yourself. So either you need a very large amount of money or you don't pay yourself as a trader. You pay yourself by some other means and then use your trading income to compound your account. But then again, what's the point in doing that? Hard. You basically just need a big bank balance and you need to put risk on the table enough to pay yourself. So you need to risk a percentage of an amount which you can come up with. If you've got 100 grand, use 30 of it. That way you're going to make somewhere between 3 to 5K a month. If you've got 30, you can use all of it. But then if you do blow it, you're out of the game, aren't you? Yeah. If you've got 200, maybe you want to use 30 to 50 of it. If you haven't got anywhere near that, you can't trade. Because you can't trade with no money. It's like saying, people say to me, will the EA work with a $500 account? It will, but let me ask you this question. Are you looking to make money trading? Yes. Okay. So if you had your $500 and you went to an estate agent and you said, I want to open a shop on a high street with $500, would he laugh at you? Yes. Why do you think you can become a trader and earn a living with $500 if you can't open any other business? This is a business like any other. If you want to open a business, you need 20 to 30K at least to start it because you've got marketing costs, you've got stock, you've got services, you've got staff, you've got equipment, you've got premises, you've got whatever else goes into starting a business up. If you want to start this, there's no overheads, but there is a bankroll. That's your overhead. You can't do it for $500. This is why everyone's going, I've got $500, I'll buy 100,000 in an account with a prop firm. Pop. Oh. And now all the prop firms have gone pop as well. So what do you do next? Stuck. We're all stuck. Stuck in this never-ending cycle of needing money. Would you make a series of you starting an account with $200 to $300 and see where it gets to? I can tell you where it'll get to. About 10 to 20% a month. So if I start with $200, I'll have 220 by the end of the first month. By the end of the second month, I'll have about 245. By the end of the next month, I'll probably have somewhere around about 260. Then I'll probably have a bad month and drop it back to about $235. That's what will happen. But that won't happen because if I was trading with $200, I wouldn't be able to get enough lot size on to be able to trade because I could only trade with a 0.01 lot size and that would be over leveraged for a $200 account. The way I trade, you need a minimum of 3K to start. And that's only going to return you £300 a month, or $300 or whatever it may be, 300 to 500. We could use opening range breakout strategy to do it. That would be faster. But then what, it's going to hit a losing run, isn't it? You're always going to hit a losing run. I was just looking at the DAX. I actually meant to look at the Dow because I wanted to see what the Dow was doing. It's still pushing down. So Dow is on a rally down. I'm getting close to TP on that. The DAX, the NASDAQ, just forget it today. It's literally not going anywhere. We're back exactly 1.5 hours in, and we are back exactly where we started. S&P is ever so slightly down 1.5 hours in. We've moved 1R. We're 3R on the Dow, so we've actually had a decent break on the Dow. But if you look at it, it's all stalling out down here. Yeah, we've hit this propulsion gap. Yeah, which is where the buyers started to move on that break. They've added. Sellers have tried to push them back again. They're adding. Sellers have tried again, adding. Sellers have tried again, adding. We're holding. So I'm tempted to get out, but the thing that worries me is this support. If we come and retest this support, if I get out here and it pushes down, ADR is all the way down there. We've got an awful long way to go down to get to our average daily range. If I get out here and it drops down to there, that's going to be a huge loss, far too big. So it does, however, look like we're stalling. I was just looking at wanted to watch the Dow to see if we could get some more movement down, but it's stuck. So tricky today. I got a feeling it's going to be a losing day today. But you never know. We might get a bit of movement towards the end of it. But yeah, I've thought of doing these, turn $1,000 into something else, but I don't want to be a gimmick like that. Anybody can turn. These people that do these videos where they turn money into something else, they take $1,000 to $1 million or 5,000 to 50,000 or whatever it may be. They'll do a video series on it and they'll show you how they did it. You very rarely ever see them do it live. Yeah, there's a reason for that, because they're not doing it. What they're doing is they're setting up 10 accounts. They're using 10 different strategies, and the strategy that has the good run is the one that gets shown. Then you buy that strategy, and then it doesn't work because that was 1 3-month period out of a period of time where it actually worked. So, this is what the Lamborghini crowd do, don't they? There's videos all over the web by those guys, that guy with the gold teeth and the chain and everything, 10 to 1 million, standing in front of his Lamborghini, not a trader. He sells you a course, shows you how he turned that 10 into 1 million. He didn't do it. Didn't show you the other accounts that all lost 1.6 million. Most of it's smoke and mirrors, isn't it? Whereas I will sit here, go through days like this where I'm losing 4 or 5% in a day. Happens. But then I'll also sit here and show you the 7 or 8% days where we gain, and the 1 and 2% days where we gain, and then the days where they're break evens. The real trading where your P&L ends up looking like that. Which is what P&L looks like. But as long as that price and that price over the period of the 12 months is a line going up, job done. But if I show you that period in a 3-month video, you wouldn't be interested in buying my Lamborghini course, would you? If I show you the 2 weeks where I did that, you'll buy my Lamborghini course. If I show you the 2 weeks like that, you're definitely not going to buy my Lamborghini course. But then I'll show you the 2 weeks like that and you will buy my Lamborghini course. But if I show you the entire thing, you won't sit there long enough to realize that there's an edge in the strategy, then it's going to work and pay you long term. That's the difference. This is why it's so hard, isn't it? Not to system hop, because you get a losing run and you do one. That's what we do. We don't realize we've already found the Holy Grail. We just let go of it every month because it doesn't do what I want it to do. Children don't do what you want them to do, but you don't get rid of them, do you? Same as your pets. Occasionally they might poo in the house. You don't get rid of them. You teach them. Well, some people might get rid of them. Depends how much they poo, doesn't it? We are bouncing on the Dow. So this might be it. Dangerous exit, I think. So I'm going to leave that for the minute and see if it can push down further. Right, I'll leave it there. I've got other bits and pieces I need to do. I need to get this manual done. So I will be back at tomorrow morning at 7:50, and I will be back tomorrow afternoon at 2:20. And yeah, we'll see how we get on with this US dollar tomorrow. Is the US dollar weakening? It may be. I don't know. Let's have a look. Just before I go, we'll have a look. Euro US dollar. If that's going up, it is. Yeah. Weakness again in the US dollar. Don't get rid of the children. This guy kills me. Well, you know, you've got laws in this country. If you try and get rid of your children, there's only certainly so many ways you can get rid of them as well, isn't there? So, not that I would ever want to do that. I'll see you guys tomorrow. Have a good day. And yeah, if you need me, I'll be in Telegram. Have a good one.